Uh.
Right. Good morning, good morning, good morning. Today is August 6th, Wednesday. We're going to go ahead and get to it and see what the market is going to give us for today. Let's go ahead and look at yesterday's markup in comparison to today. So, just to go over quickly what transpired yesterday. So, yesterday we had this candle here. So, we had this push up, this bullish push up. Price came into this small imbalance on the daily here. Right there. Real tiny. So this imbalance there. This is a daily imbalance. So price came into the imbalance and we got the push to the downside. Going back to this imbalance that became an inversion. So we're between two ranges, between this imbalance here and then this imbalance here. So we can see what transpires today. What the market can potentially give us. You got to see. Wait for the right opportunities. No reason to jump to conclusion. Like I said, as soon as the market opens up, we're not jumping to conclusion on anything. We want to wait for the market to come to us and then wait for the right opportunities. So even looking right now, on the 15-minute at the market open, you have this inversion here, right? And then you had confirmation here, confirmation here. So two confirmations, which price can likely touch and go to the downside since we took our Asian range high already. So that will be initial stop loss, because confirmation would have been right here, or you have one right here. And this can be that initial opening push to the downside. And then from there, see how price plays off of that. But that's the opening. I don't take anything on the opening, so I'm just simply waiting. Yeah, what is that? 19 points, so that's about 20 points. 70 points to the downside. So something for you guys to look at when the market opens up and see how price plays off of this. So we'll see. But I'm not taking that because it's market open, but there is an opportunity here for a sell to the downside. I'm more so looking for the push to the upside, if it gives us that. So I may have to wait for the manipulation of the market first on the opening and then see how price transpires after that. See how that plays out. So that price falls to the downside. looking at the 1 hour, we can come to this 1 hour imbalance here, and then it can fall and take out this swing low, this wick, hit it to the Asian range low. Seconds left till the market opens up. Let's see what that, if we get that push to the downside, where is it going to go back up? Now, since the market is open, you just sit on your hands and you wait. Market gonna do this do. You just simply sit on your hands and wait for the right opportunity. That's why you don't take trades on the open. Well, I don't. It's like that. Stuff like that, it frustrates you so bad because you see that, and then you're like, man, I should have took the sale. The market is opening, so even if we have a model there, that initial volume, it can do whatever it wants. So I don't want to be a part of that. I'd rather let the market do what it needs to do, and then from there build off of that. But me just chasing something to get it, especially on the market open, there's no reason to. Just wait. Some days are easier to wait than others. Like this day would have been you'd have seen that initial push down. Like, man, I should have took it. Well, if your rules is don't take a trade on the open, you don't take it at all. So let's say I did take that trade and it did push down and went all the way to Asian range low. Should I still be happy that the trade played out? Not really, because I didn't follow my rules. So you can't equate making money is still following rules. No, it's not. Because if you're taking trades without doing the right thing, then all it takes is one crash, right? Everybody said they drive. People that drive fast, you drive fast until something happens. So I'm just being cautious. I speed when I need to. It's an emergency. stuff like that when the market opens. Okay, I got a new student that just took it, and one of their rules was not trade the open. Then he's asking me, why did he trade the open? And you would think that'd be a stupid question, but it's not. Not in trading, because trading make you do things that you don't want to do, but you feel a need to because it's like you don't want to miss out. That's why I just told him, well, I might tell him, you had that fear of missing out. I don't feel like I miss out on anything. You were dealing with fear of missing out, FOMO, and that's normal. That's how we have rules, just like that, man. If he wasn't at work, I have him jump on the call. Because now we're getting that pullback. Remember, this what we marked up here is 15-minute range. So if this is going to play out, then wait for that 15-minute candle to close. This is not a 3-minute. This is not a 5-minute. Just simply wait for the right opportunity. And then also from our markup yesterday, this is that 15-minute right at that inversion, the higher time frame inversion. And then we have, let's go for backs. Here's that rejection. See if it holds up though. So we got that 1 hour, we got that 4 hour. So yeah. Off that daily. How long was that wick? 50 points. Thing is that candle gonna close like that. So even with this range now, let's do this. Go 15-minute here. We can monitor it on a 3-minute here. So this is that price action right now. All price action did just now is come back to this consolidation and push right up back off of it. But we also have this consolidation here. That price is sitting at. So even with this, let's take this 15-minute. And since we know that this is 15-minute price action, let's put that all in a folder together. Label that 15-minute. Right, and then I want to take that folder and keep it on 15-minute only. And we look at this price action on a 3-minute. Now, in this case, if you're doing this type of style, that means that you're using a 15-minute as the directional bias, and there you're using the 3-minute as your actual trade, because you're not letting 15-minute confluences like the imbalance and swing highs and swing lows interfere with what you're seeing on a 3-minute. But you know what to look for because you know the area in which you're at, and you just get in sync with market structure that way. So let's see. So right now on a 3-minute, we're in this range here. Here. This is a 3-minute range that we're in right now. Well, we should break out of this pretty soon. Once we break out of it, we run away from it, we get expansion, you wait again, let price consolidate and build up more confluence. Also, today, so the kids go back to school tomorrow. So I'm trying to figure out a time to go live. It's gonna be earlier. It's 9 times out of 10. It's gonna be before market open. So I'm figuring that out with my wife tonight. Trying to come up with a good time. I'm thinking 6 to 8. That's what I'm thinking. But yeah, I'm thinking London session. Tomorrow, I may be good still to go live regular time. I don't know. I'm gonna see today. I'll let you guys know today in the chat. But yeah, it's gonna have to be early. Trying to deal with traffic to get her to school and then get back in time, that's gonna be a mess. But I'll figure it out today. Okay, so we are waiting to see what price wants to do. This be the hardest part, just waiting. It really do. Now, what I would like to see is that 15-minute candle close, and then price tries to run up like 50% of that, this big wick to the upside, and then it stalls off, and then it falls inside of this one of these imbalances here, these confirmations, and then it stalls off there, and then we get a drop, and then the 3-minute is also lining up with what we're seeing. But we'll see. And if it drops straight from here, so be it. Today, I'll be done with this stream at 10 instead of 10:15. There's that push back up. So, but we're getting that push back up, but now it's just falling to the SIBI, which is still an inversion and confirmation on a 3-minute. It's just not clean. So even with this push back up, you can see if it goes to this high right here, which will be the initial stop loss. So if it runs into a premium, if it does run into a premium, how far does it run into a premium? Does it go all the way up to this high, or does it stall off, start to consolidate? But remember, it's a 3-minute, so those candles can take some time to print. So that means you want to go down to a lower time frame to monitor that if you're trying to get a quick scalp. But for me and for you guys, I try not to scalp. I try to look for good opportunities, but nothing wrong with scalping. But for the sake of everybody as a whole, I just try to find decent areas of interest, and then from there you can have a multitude of opportunities in that area, because the model pops up everywhere. Let's see. there's that premium price. There's the high. So we are ranging right now. So now I dipped into a discount and it's pushing back up. So right here, this is where price can get super confusing. You get super frustrated. But see how I was able to find a range in which price is just dealing in. So the 15-minute looked like it wanted to sell down to the downside. But why did I not look for the 15-minute sell? Because the market was opening and I don't want to deal with that early manipulation. So then you go and look at that key area and then look at the 3-minute and then see what's transpiring right now in the 3-minute. And it's this. We're stuck in this range until it breaks out. And it's either going to break out to the upside or to the downside. You still got a whole 12 minutes to that candle, that 15-minute candle close. And this is 15-minute candle confirmation. But remember, we're not looking at the 15-minute as a model to trade off of. We're using the 15-minute as a confluence. That is so important depending on what time frame you like to look at it at. Somebody else can use the 15-minute as their actual trading model and use a higher time frame as direction. But if you're somebody that likes a lower time frame like I do, I like 3-minute, 1-minute, 15-second. If you're doing that, then you need a good base for a higher time frame as direction. For me, that will be 15-minute. Even sometimes, if depending on how low I go, that can be a 5-minute. So I'm not looking at a 5-minute as an entry model. I'm looking at it as confluence or my directional bias. Okay, we go to the upside. Cool. Remember when price runs away from here, and I will get rid of all of this because I'm starting fresh. You're trying to figure out what's the bias as of that moment. And then I can simply stay in sync with a 3-minute price action because you can have it like this. Show you. So you can have it like this to where you got everything in below. Well, look how messy this is. So I'd rather have one time frame where I focus on the higher time frame bias or direction, and then the other time frame where it's clean, just clean price action, and it's a clean slate. So current interval only, and then boom, because I already know where I'm at. I can see it clear as day. So I don't need nothing to overlay to show me where I'm at, because I can look to the right and see where I'm at right there. And that allows me to look at the 3-minute more clearly. So now what we can do, you can do two things from here. You can look at 15-minute consolidation, or you can look at 3-minute consolidation, or you can go 15 to 3-minute. So just right here, since price is pushing up now, you look at this area where price has been before. So we had this push down, this push up, this push down, this push up, this push down, this push up. We had no real consolidation in this area besides the push down, and we consolidated right here. Well, not even that, pretty much, because price just pushed up and went to the downside again. So we had consolidation here, and I would say here. But consolidation you could use is this one right here that we're at right now. So you could say, I want to see price get above this consolidation. If it doesn't, then you can use it to your liking. So this consolidation right here, even though it's at a high already. That. And then 15-minute. So now from here, that's still 3-minute consolidation as well. So you can redefine it on the 3-minute, or you can keep it on the 15-minute. So for me, since I know it's a swing high already, instead of me using the 15-minute as a consolidation, I'll use that 3-minute. So just go and then redefine it. So you'll grab it just to see if you can fine tune it on the 3-minute. So that'll be basically it's close though. So here, this body to that body, and this will be my 3-minute consolidation. And we took the high, we're going back into a discount in the same range, and then now we're going back into this floor or busy. So right now our price is in consolidation. Is it giving any real movement? Not yet, because we're just stuck in a tight range. Now if you're on a lower time frame and you've seen that this high taken out, there could have been an opportunity for you inside of here, but you have to base it off what you're looking for, not nobody else. So here, let's go and see. So you would have had this here, this push up, this inversion here, and then this confirmation here is inside of a premium. So this is 17 points. Are you looking for a sell, or are you looking for a buy? It's based off what you're looking for, and then you build off of that. So it's based off what you're looking for, and you have to be okay with the risk. So are you okay with taking a 17, 18 point risk in a range right now that's going back and forth, and you really can't tell which way it wants to go because you have things stopping it from going both ways? Is it a clear-cut path? All those questions you have to ask yourself. And if you start to hesitate, like, I don't know this, I don't know that, cut it. Just wait. Like, waiting, that is definitely a skill set, man. It really, really is. If you know how to master it. And just staying patient, knowing that opportunities don't come all the time. That's all it is. When you start to realize that you can have opportunities all the time, you don't jump to conclusion on your trades. You just let them kind of fall in your lap. That's what you want. Back at that consolidation. Let's see. This price action is crazy. It's sitting at that range. Just in price action right now. Change this to 3 minutes. Do something. Golly. It's a nasty consolidation. Look at that. This is how you get chopped and screwed for sure. There's that expansion up. This 15-minute candle is not closed. You want that candle to close. Here's the crazy part, sir. And let me say, crazy is not even a word. It's just not even crazy. It's not clean. That's all. I don't want to say crazy. But this is not crazy at all. It's wild because it ain't going nowhere. Like this whole range back and forth here is 40 points. Just back, forth, back, forth, back, forth. Okay, there's our expansion. So while that's expanding, I'll be right back. Okay, that's crazy. Look at this. Came right back to this consolidation though. Look at those crazy wicks. Yeah, price action like today get you in trouble. So we broke out of this range. We're coming back into this range, but from no in this price action, no way. I was about to say this price action, it's nothing's clean. And if you have to like force yourself down to a lower time frame to see something clean, then that's not the way you want to do it. It should be clean from top to bottom. So what I want to see now is, do we make a swing low inside of here on a 3-minute? And then that'll be our new range. But we're just falling back into our old range that we're already in. So now let's take this off. And focus on this 3-minute candle here. Okay. Do we drop lower than that? Ooh, that's nasty price action. Let me finish that. 35 point. Yeah. This candle closes on this 15-minute, and then we can look at the midpoint of this wick. I can look at it now, but I'd rather let this candle close and then this candle be a swing high, and then I look at the midpoint. Because in that case, I should have looked at this midpoint, this wick, and then midpoint, this wick, and then. But I'd rather have a swing high. That's all I was waiting for this candle. If this candle would have did this and this next candle would have closed below it, then I would look at the midpoint of this one. But what I could see happening, possibly, is this swing low being created. We have a dealing range from this high to that swing low, and then the midpoint of this wick is about 50% of this range, which is the wick pretty much. But and then see if price comes into 50% of this, and then punches to the downside. But with this price action right now, yeah. Because you got this swing low here that was taken out. Came from this swing high low. This swing high was swept. Now this price punch to the downside. Because we got something trying to be sneaky, which is that right there. Asia range low. Because price can never get there. Price can just stay up inside of here and then continue up. And it's not clean enough to like give you that type of sign. It's kind of giving you mixed signals. So it's like, Okay. 20 seconds left to that 3-minute candle close. And then we have a 3-minute dealing range right now. Well, this thing ain't going nowhere. Not yet. There. So now let's make this different color. So that's that range. Lowest taken out, price continues to the downside. So how did I use this swing low? When price pushed up, we had this at BISI right here. All I did was take the high at the BISI. This will be a liquidity break. We push to the downside, and then once you punch to the downside, whatever that swing low would have been made, that would be my dealing range. And let's say price doesn't come back to an imbalance yet, but it just keeps going to the downside. Well, I would just extend this until it's done and starts to retrace back up. But as of right now, it's gonna stay right here. Man, listen, you gotta be careful with this market. You gotta be careful. Because if you jump in without seeing anything or no good confluence, that's how you lose your account. That's how you don't stand a chance with the longevity part. Making the money, yeah, cool. You can have one, you can have one or 2 days or a good week or a good month. But it's the longevity, man. Listen, the market will take all of that back and some. Yeah, it'd be like that, man. But that'll make you crash out too. So it's just like, is it worth it? To me, it ain't never worth it. I done been there. I done that. It ain't worth it. Yeah, a good win. Now, not a random one. Because what's a win to you? A win is making money. That's not winning. For me, winning is seeing the right model, having a consistent model, seeing it play out, and it played out to the T. And I know I can do that same thing consistently. See the 3-minute candle close. Okay, cool. Close below the consolidation. Let's see if we get a swing low, or is it going to continue to the downside? And close. So Okay, see if we get that swing low. So let's extend that. See how price reacts to that low. Let's see if it extends lower without falling back into it. As long as it doesn't push back and fall into this imbalance, I can keep using this range. But if price falls into an imbalance, makes a swing high inside of an imbalance, I have a smaller range. It may extend out a little tad bit more and put this consolidation inside of a premium. Okay, there's that, starting to get that push up. Okay, let's see if that candle goes higher. Does it close below? Now you do have this inversion here and this confirmation here, but based on the price action we've been getting today, I don't like this whole area. Let's see if that candle closes below. And we can use that swing high and this swing low as a dealing range. It's a small range though, so I will look at that range and then go to a 1 minute and just look at it. If it gives us that range. So we'll see. Look at this 15 minute. That is disgusting. Swing high in there. Just continue to be bullish. What I'm gonna do now? What's time left? Since we're getting this push up, I'm gonna go 3 minutes. We already know the 15 minutes nasty. So 3 minute over here and then 1 minute here. So all the way up here, you got this 1 minute confirmation and inversion here. If price wants to go that far. We have a second one here. So it's two of those here, there and there. Then inside of a discount, you had this one here. Back to a discount. So you got this right here. That's 3 minutes. Inversion confirmation. 2 confirmations. But you see, we've been in this range the whole entire time. So if you're able to find the range that you're in, you're able to dictate where you want to be at. So you either have a premium sales or discounted buys. Points. 30 points altogether. It tapped it, so let's see if this is going to be dropped from this first confirmation. Yeah, this is nasty price action. Let's see if we get that push down. now we'll look at the midpoint of this. Nasty price action. The last line of defense for that will be this. You got but back below here. If you are in this, you want to keep eye on that. The midpoint of that wick, if you get back above it. Got this small sippy right here. Okay, let's see how we push. With that nice rejection on the 1 minute, that should be a good push. You should start to see momentum to the downside. And we have 10 minutes left to that 1 hour candle closes. So this should be that ending hour volume. If it starts to reject back up to the upside, that's what you don't want to see. Because it already showed you a willingness not to want to go up. So if it tries to go back up again, then that's price action you don't like. Now, what you would love to see is it go back below this consolidation. That's what you would love to see, because then you get a continuation to the downside, trying to target this low. But you may get price just going to a discount. This is you just monitoring the trade. nasty price action. So like even something like this, if you're in it, you're in it here, and it pushed down, you were just monitoring it all the way until you had these imbalances here, and this first one here, when this closed above, this is like, yo, okay, what's going on? And then price starts to pull back up, and it still gives you time to close partial or close out whatever you have before you get that push back up and actually managing it. Okay, fellas, I guess it's gonna be price action today. So, like I say, tomorrow she has school, so I may not go live tomorrow. Um, and go live Friday once I figure out scheduling. So I'll let you guys know in the chat tonight if I go live tomorrow, and then we'll resume Friday, or we'll go live Thursday, and then like I'll usually do, be off Friday. I'll let you guys know in the chat. I'll be back at tomorrow, my guys.